You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning, traders. This is your Options News Rundown for Tuesday, November 13th. Our first story today is from Bloomberg. U.S. stocks struggled to hold early gains this morning after a slump in oil prices hurt energy firms, just as hopes were rising for progress in the American-Chinese trade dispute. The dollar slid and treasuries climbed. The S&P 500 index fluctuated this morning as West Texas crude hit a 9-month low, and while technology shares emerged from a 3-day malaise pushing the Nasdaq higher, the Dow Jones Industrial Average declined as Boeing and Home Depot failed to find a foothold. The early market mood may have been buoyed by a report that China's Vice Premier Liu He will visit the U.S. to pave the way for a meeting between the leaders of the two biggest economies later this month, which also supported some commodity currencies. The stock's Europe 600 index paired gains after rising for the first time in 3 days, with telecoms firms leading the way after Vodafone Group plc delivered better than expected quarterly results. Key Asian indexes slid, with Apple suppliers showing Apple suppliers under pressure after the iPhone maker fell on signs of deteriorating sales outlook. WTI oil dropped for the 12th day in its longest losing streak on record after Trump criticized OPEC producer Saudi Arabia's plan to cut output. Treasuries climbed, and the dollar fell from an 18-month high. Britain's pound paired losses that from the past 3 days after Prime Minister Theresa May said talks with the European Union were in the, quote, end game, and data showing UK wage growth accelerated. Next up, CNBC is reporting that Goldman Sachs estimates Apple will produce 6% fewer iPhones next year than previously expected after key supplier Lumentum reduced its shipment outlook, according to a report this morning. Quote, we are concerned that end demand for new iPhone models is deteriorating, said Goldman in a note. We note that this could easily right itself given the bulk of demand comes in late December, but we feel more prudent sell-through forecasts are warranted due to the timing and magnitude of this warning. Goldman has a neutral rating on Apple and lowered its price target on the company's stock to $209 a share from $222 a share. Apple shares fell 0.2% in early trading today. Last up is a story from Reuters. Amazon Inc. picked America's financial and political capitals to split its new headquarters, saying on Tuesday that it will build offices for up to 25,000 people in New York City and close by Washington, D.C. Amazon plans to spend $5 billion on the two new developments and expects to get more than $2 billion in tax credits and incentives, with plans to apply for more. This move ends a frenzied year-long bidding war among cities across North America, splitting the location among two finalists. In addition, Nashville, Tennessee will become home to what Amazon is calling its Operations Center of Excellence, adding 5,000 corporate jobs. The new Washington metro area headquarters will be located in National Landing in Arlington, Virginia, and the New York City headquarters will be located in Long Island City neighborhood in Queens, across the East River from Midtown Manhattan and the United Nations. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. I'll be back tomorrow with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.